In the past, I made a video about 3 hold forever dividend stocks. Although this video was good, and I definitely still recommend it, it only went over 3 stocks, which simply put, isn't a lot. I liked the idea though, and wanted to revisit this topic, but this time add even more stocks to the list. That is why, in this video, I'm going to go over 7 hold forever dividend stocks to add to your portfolio right now, and by the way, none of these stocks were in my previous video. So if you want even more picks, make sure to check that previous one out as well. Anyways, let us get right into it. Before we start this video, make sure to like and subscribe if you're new to the channel because I will be posting dividend stock videos just like this one every few days. The first stock on this list is a financial stock and in my opinion is the best financial stock out there, Visa ticker V. This stock is the most commonly known as a credit card company that works with many different financial institutions. They also make their money through debt as well as taking a percentage of all payments made using their cards. This business model requires very little operating costs and it has allowed Visa to consistently have a profit margin of well over 50%. Because of this, the company has tons of free cash to do what they want with. One of the ways the company uses this free cash to reward shareholders is through growing their dividend. Visa is a compounding machine with a 10-year dividend CAGR of around 18%, and even the most recent hike is in line with this, showing no signs of slowing down. Presuming Visa is able to continue to reap in high profits using their proven business strategy, this dividend will grow over time at a quick rate, allowing investors to get a great yield on cost over time, and for that reason, it is my first pick on this list. Not to mention, Visa is actually a stock that I own in my portfolio, and it is one of my favorite, and I'm planning on never selling it. The second stock on this list is Walmart, ticker WMT. Now admittedly, I am slightly cautious to put a retail stock onto this list for buy and hold forever, but if I'm going to mention any retail stock in this list, then it is going to be Walmart, the biggest retail chain in the world. This company is currently worth over $400 billion, and it is the biggest company by revenue as it brings over $500 billion of revenue in every single year. Obviously though, the reason the market cap of this stock isn't in the trillions is because the profit margin on this revenue is so low. Despite this, as far as any retailer goes, this one is my favorite. As I was mentioning, it is the biggest in the world, where millions of Americans buy literally everything in their day-to-day life, and they have been able to expand into the online shopping space in order to prevent slowly being phased out of relevancy by companies like Amazon. In 2022, the retail giant stated that over $80 billion worth of sales were due to its online sector, showing that a large chunk of Walmart is slowly transitioning online, which is a good sign. This retail giant obviously has to deal with issues such as theft, but I like Walmart when compared to some of its other retail counterparts, mainly because of their very low prices, super high presence all throughout America, and they don't get into controversy that often, which although doesn't seem like would be a problem, it has been a problem with Target, for example, earlier this year. Now, Walmart does have some problems that I will admit. Firstly, it does have a low starting yield at just around 1.5% and has a pretty low dividend growth CAGR as you can see on screen. In addition, Walmart does trade at a pretty high PE when compared to some of its counterparts. However, the reason for this is because you can count on Walmart to be a company that will still be around and kicking in your portfolio in 10 or 20 years, really no matter what, which makes it the second stock on this list. The third stock on this list is JP Morgan, ticker JPM. This stock is the world's biggest bank by market cap and it isn't even close, with Bank of America being a not so close second. This stock has achieved such great returns by a combination of strong brand presence and fantastic leadership, notably under CEO Jamie Dimon. Jamie Dimon has been in power since before the financial crisis of 2008, which is pretty unheard of in the financial world, and under his leadership, JP Morgan has done very well. JPM also has the biggest market share of any bank in the United States, and it has done this by consistently absorbing smaller banks, often during financial crises, which we've seen just this year with their buyout of First Republic Bank for cents on the dollar. These well-timed and smart acquisitions have prevented JP Morgan from ever overpaying for increased market share, and has also allowed JP Morgan to continually grow their customer base at a pretty cheap cost. The stock currently yields just a bit south of 3%, meaning the starting yield isn't too shabby either. In addition, a low payout ratio of just around 26%, as well as a dividend CAGR for the 5-year of around 10%, leaves this stock looking pretty decent, even at a pretty high evaluation. Just like Visa, this is another stock that I own in my personal portfolio, and I do not plan on selling it, which is why it is the third stock on this list. The next and fourth stock on this list is the PepsiCo company, ticker PEP. Now this stock is very similar to another stock that I mentioned in my last buy and hold forever dividend stock video, Coca-Cola. Like Coca-Cola, Pepsi specializes in consumer goods, notably in the beverages market. Unlike Coca-Cola, however, Pepsi also has Frito-Lay under its belt, which has a ton of snack brands under its name. The company has a super impressive portfolio of brands that I am showing right now on screen that include both snacks and drinks. The growth of this company has also been really fantastic, with it being up around 44% in the last 5 years. Pepsi also yields a very respectable dividend of around 3% and has grown this dividend at a rate of 8% annually for the past 10 years, and the most recent increases also seem to be in line with this, which is a good sign. This stock is down around 15% from all-time highs, which means although it is definitely not cheap, it is at a more respectable evaluation. Although the PE is high for brands such as Walmart, Coke, and Pepsi, you are paying for this high PE because you are getting a quality company back in return. Pepsi has a PE of around 27, which when compared to Coke is on the high side, but Pepsi has also delivered much better returns that Coke has been able to manage in recent history. Overall, people will continue to eat snacks and people will continue to drink soda, which makes this a great hold forever stock. The fifth stock on this list is ExxonMobil, ticker XOM. This company is a gas and oil giant that was a result of the merger between Exxon and Mobil in 1999. Speaking of mergers and acquisition, Exxon recently acquired Pioneer Natural Resources, ticker PXD, for a total of $59 billion, which sent ExxonMobil stock temporarily downwards. However, I believe this acquisition will be one that will pay off for Exxon investors in the long term, as it will provide ExxonMobil with additional exposure to hydrocarbon exploration within the United States. This acquisition will over double ExxonMobil's acreage within the United States and will drive revenue up higher. One thing I will warn against is that oil is probably the most cyclical business out there as far as large companies go, so investing into ExxonMobil at any given point can prove to be more volatile than the overall market, even if in the long term the total return is still great. Exxon currently yields north of 3.5%, which is fantastic. However, the dividend growth is definitely on the lower end, with the 5-year CAGR being around 2.64%. Oil as a commodity is being slowly phased out, but the world will continue to be dependent on this resource for at least the next few decades, allowing ExxonMobil to continue to profit. In addition, ExxonMobil has poured billions of dollars into making their company more green. This will hopefully allow ExxonMobil to continue doing what they're doing without as much of the pressure coming in from political bases as the world turns more and more green. Either way, this company may cease to exist going forward maybe 100 years, but at the same time, all of us will probably be ceasing to exist in the next 100 years, so I think this is a great buy and hold forever stock for the time being. Southern Company, ticker SO, is the sixth stock on this list, and it is a utilities company based out of the southern United States. They offer gas and electric utility, and the company is the second largest in the US in terms of consumer base. They operate through electric energy in 3 states and have natural gas distribution companies in 4 states. They own over 100 different power plants and are able to generate reliable, affordable, and clean energy. One thing that I want to mention about this stock is that it is basically a monopoly and is where a large majority of Americans in the South get their power from, with little to no sufficient alternatives. This has allowed Southern to have a fantastic consumer base and generate high revenues. It still has tons of investment into nuclear energy, with 3 nuclear power plants allowing the company to generate relatively cheap and green energy. This allows Southern to continue to create revenue without as much of the long-term issues that will end up plaguing its competitors. Although the 10-year and 5-year dividend growth CAGR is low at about 3%, the starting yield of over 4% does make this an attractive stock, even though it is valued near the higher end for companies in this sector. The last stock on this list is another stock that I own myself, and it is the United Health Group, ticker UNH. This stock is probably one of the best dividend growth stocks you can buy. United is an American multinational healthcare and insurance provider based out of Minnesota. They are the largest health insurance company in the world, and although their net profit margin is pretty low, the sheer numbers of their consumer base combined with the necessity of their product makes the business very profitable and extremely safe. As the average American continues to age higher, healthcare and insurance is becoming more and more of a necessity, allowing United Health Group to become larger and larger. UNH is already worth nearly $500 billion, however their generally high PE when compared to similar companies is still acceptable due to the quality of the underlying business. The company does yield a lower than average yield of under 1.5%, but due to its low dividend payout ratio and ultra high CAGR, that being a 5-year dividend CAGR of 16% and a 10-year of over 21%, consistent and high dividend hikes should be expected, making this the 7th stock on the list and definitely one of my favorites, which is why I own it. That is it for this video, and thank you to all who have watched it until the end. I hope you agree with some of my picks, and if you do not, let me know in the comment section below. I know I didn't do a deep dive into any of these companies, but the real reason is because this video is really just to get some ideas in your head so you can do some extra research yourself, because I am going over 7 stocks in a pretty short video, making making it pretty difficult to get a good picture of exactly what the business does. Anyways, if you don't agree with my picks, let me know as well. I'd love to hear your feedback. Anyways, guys, I will see you all in the next video. Make sure to like and subscribe if you haven't already, and goodbye.